Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, February the 12th. Near session low, the same in the wheat with Kansas City's about unchanged. Yesterday's U.S. U.S. ending stocks unchanged in both corn and soybeans, just modest changes to the wheat balance sheet. Saw ending stocks drop 4 million bushels. The market seemed a little bit disappointed. We did not see an increase in corn usage and a resulting lower ending stocks forecast. Speculative traders did turn modest sellers, unloading just over 5,000 contracts in the corn. However, they still sit at a rather large short position at over 340,000 contracts. Funds are also sellers in the beans for the third consecutive day, unloading about 4,000 contracts now, cutting their long position back down to about 41,000 contracts. World balance sheets did tighten up a little bit as USDA lowered production for corn in both Argentina and Brazil by 1 million metric tons. Exports from Brazil and Ukraine were lowered 1 million metric tons as well, while Chinese imports were slashed 3 million metric tons. The USDA was aggressive in cutting Argentine production by 3 million metric tons. However, held production in Brazil unchanged at 169. This while most private forecasts are over 170 million metric tons. With the lower trade yesterday and overnight, would appear the market is bracing for a higher forecast down the road. CONAB will be out with their updated production numbers tomorrow morning. Wire services this morning are reporting that Brazilian crushing operation ABER, they held their production forecast unchanged at 171.7 million metric tons. With the USDA report out of the way, the markets will refocus on South American weather and tariffs. We do get a key inflation report out later this morning. The consumer price index is expected to show a 0.3% increase month over month, with the annualized inflation rate at 2.9%. We also get weekly ethanol production at 9:30 Central Standard Time. Major winter storm is moving through the nation's midsection today, which is expected to bring a protective layer of snow across much of Kansas and Nebraska ahead of this weekend's frigid cold temperatures. In South America, a much more active weather pattern is expected to bring relief to the drought-stressed areas of Argentina. The second half of February, however, damage from the heat and dryness so far this growing season will likely be irreversible. Not a disaster like we had a couple years ago, but not as where we thought it would be maybe a month or two ago. In Brazil, a much drier outlook across the central portions of the country will enable soybean and corn harvest to accelerate, along with second corn plantings. Above normal rains are still expected across the deep south for another week to 10 days in Rio Grande do Sul. March corn just broke through this week's low, new low for the week. Next support is at last week's low at 472.5, about 9 cents away from where we are currently at. Support for March beans is at the February low at 10.32, which is only a couple of cents away. The 100-day moving average, next support level below that at 10.23 1/4. Meal made a new low for the month and currently challenging last week's low at 293.50. Inside trade for March bean oil as that consolidates very near 46 cents a pound. In spot wheat, has support and March Chicago at the 571 1/4. That's 100-day moving average. The same support level for Kansas City comes in at 575.5. Thanks for listening, everyone. Have a great day.